Hey everyone, welcome to this episode of Breakthrough Innovation. With us today is Matthew Tuttle, CEO of Tuttle Capital Management. Matthew is a trailblazer in the ETF space, having introduced some of the most innovative and unconventional ETFs in the market. From launching the first ETF that shorted another ETF, to breaking ground with ETFs targeting media personalities and pioneering single stock ETFs in the US. Matthew's firm is redefining how self-directed investors navigate these markets. With over $3 billion in assets under management, Matthew's journey has been one of resilience and innovation, building and rebuilding successful ETF businesses 3 times. Known for his disruptive approach, Matthew uses his proprietary HEAT formula, Hedges, Edges, Asymmetry, and Themes, combined with AI to cut through market noise and deliver unique investment strategies. Get ready to hear how he stands out in a crowded marketplace, tackles challenges, and continues to innovate in the fast-paced world of ETFs. Matthew, thanks for being here. I think this is going to be an interesting conversation.
Thanks for having me. I hope so.
Well, to start off, can you tell us a little bit about how you got to where you are now and where you came from?
Yeah, so the investing bug caught me in middle school. So like sometime around 1981, 1982. I am old. So right out of school, got into financial services, had this idea of what it was, and I was totally wrong. What passed for, I guess, advice was horrific. Firm-centered, not fiduciary in any way, shape, or form. So I kind of figured, hey, the only way to do it right is I got to do it myself. So left Wall Street, started my own firm, started investing, had other financial advisors come and ask if I could invest money for them. Not a problem. Started doing that, then realized doing that through ETFs would be a lot more efficient. Launched our first ETFs in 2015 and never looked back.
Nice. Well, I love that idea. I think so many entrepreneurs identify the pain point in their life first, and then find the ways to sell it, and then find the opportunities to engage with their customer. I am curious though, like the ETF space, that's incredibly competitive. So what are you doing to make sure Tuttle Capital Management is standing out in such a crowded marketplace?
So I think there's a few things. Number one, I have an advantage from the standpoint that I'm also a trader. I'm developing products that I would trade myself, not just, some guy sitting in some think tank trying to figure out what people want. I'm talking to people, all day, every day on social media and through other platforms, and I'm one of them. So I know what I want. I think number two, I'm not afraid of pissing people off. So, we've launched a lot of ETFs in the past that, have gotten people angry. I'm blackballed from CNBC, for example, because of my inverse Jim Cramer. But you know what? I'm going to launch a good product and, I'm not going to worry about breaking eggshells. And then, I also can move very, very quickly. So, I do ready, fire, aim. If I come up with an idea, from the moment it's in my head to getting it out there doesn't take me very long. But I have a no sunk cost mentality. So I could go down a route, spend millions of dollars, tons of time. If I realize it's not working, I'm going to cut it off right there and move on to something else.
No, I like that. And thankfully, I don't think Jim Cramer is a listener for the podcast. So I think we're probably safe.
If Kathy Wood is, you might still have an issue.
That's fair. That's fair. But if I'm hearing you right, if I'm going to summarize a little bit, you're saying don't wait for anyone's approval. Do what you think is best. Don't fall into that sunk cost bias. If it's not working, stop. Learn as fast as you can, act as fast as you can.
Yeah. And again, don't be afraid to, crack a few eggs along the way and don't be afraid to stand out, which, goes hand in hand. I mean, I always tell people no one ever achieved extraordinary results doing what everyone else is doing. So, I try to, I'll learn from what other people are doing. And if you found a way to be successful, but I'm not going to copy you, I'm going to try to figure out, all right, what did you do? How can I do it better? Where's the flaw in your approach? How can I fix it?
Yeah, there's that quote by George Bernard Shaw about the unreasonable man, that if anyone listening doesn't know what that quote is, go look it up and it'll make a lot of sense here. I do think it's interesting. You mentioned earlier, or we mentioned earlier, the heat formula. So hedges, edges, asymmetry, and themes. I'm assuming that's a big part of your approach, and what you, looking at what other people did, that was your fix to do it better. How has that really affected the way you approach market opportunities? And maybe even one step further, kind of going into the future, how has AI started to play a role in that and enhanced your strategies?
Yeah. And again, I've been investing since like 1981, 1982. I've seen a lot. What I've also seen is what passes for the conventional wisdom. A is neither, and B really hasn't changed much. And, and again, nobody ever got successful. Nobody ever got rich investing the way everyone else is investing. There's a reason the Forbes 400 isn't the Forbes 40,000. So, automatically I'm looking at the conventional wisdom and saying, all right, how do I do this light years better? And, and I'm constantly evolving. So the heat formula is what, 40 years of 40 years plus of my thinking on markets continuing to evolve, and it will continue to evolve. So the next kind of step in it is now using the power of AI. With AI, I have the top analysts in the world sitting on my computer. I just need to know, he's sitting there waiting for me to ask him the right questions. So I need to know the right questions to ask. So all aspects of the heat formula, hedges, edges, asymmetry, and themes, I can ask AI to do for me. The thematic part is the most exciting and the most powerful, where, I can have it drill down on any investment theme I want and give me potential winners and losers. Analysis that I can do in 5 minutes that would take the top people at a hedge fund weeks to do.
So are you, what AI provider are you using, out of curiosity?
So I'm using ChatGPT Pro, and we're taping this, I guess, but we're taping it right after the DeepSeek announcement.
Right.
So I just downloaded DeepSeek, and I'm going to run them in parallel, and I'm going to see, there's already one of the things I have ChatGPT do is analyze different investment strategies for edges. And I've had it working on an investment strategy for me a couple days last week, wrong. And that'll happen. But you prompt it and, look at this. I still couldn't convince it was wrong. I put the same strategy into DeepSeek, first shot, it got it right away. So interesting. And again, I'll continue to run both in parallel, but it'll be like search engines where you have like 10 of them, and then eventually one of them wins.
Yeah. Well, and I think that's an important lesson for anyone innovating with AI, is you have to be able to validate the output. Like, AI is not so good at this point that you can just blindly trust that it's going to give you the right answer, especially when you're kind of on that bleeding edge. So if you don't have the qualifications to validate the output you're looking for, you need to find someone who does, and make sure that human is still in the middle, at least for now.
Well, right. And you need to know the right questions to ask, the way to ask those questions. I've got the smartest analyst in the world here, but if I ask it a pedestrian question, I'm going to get a pedestrian answer.
Right. Smartest employee ever that needs the most micromanagement ever. Perhaps.
Exactly. At least for now. I mean, maybe not next year, but right now, yes.
Awesome. No, I like that. And I think you have a lot of people pinning hopes on AI. I think it's good to have a little bit of a cautionary tale that it can be wrong. You have to be able to validate it. And just because another version of AI is right doesn't mean it always will be. So, given that you've been introducing all these different types of ETFs and targeting media personalities and things like that, like Jim Cramer, we'll say his name a few more times for the SEO, I think. I'm curious, how are you identifying these gaps in the markets and how are you justifying or determining which calculated risks are worth taking in a new product launch?
So I think it comes down to mindset, and being an investor, I'm doing the same thing. So as an investor, I'll read a news story like DeepSeek, and I'm immediately thinking, what are the investment implications? Who are the winners? Who are the losers? I'm also looking at the ETF marketplace that way, a little bit differently, but what's coming out? What's working? What's popular? what should be there? What do people need? And constantly thinking about that. And as you're seeing markets change, what are the cutting edge ETFs you're going to need as market change? What new sectors, industries is AI creating? Or what new groupings of sectors and industries is AI creating? So it's just always thinking product development.
Yeah. Well, I like what you're saying. ETFs, the market is a really complex open system, and it's tempting to look at it as just a system and forget the human element that's mixed in. And what I kind of hear you saying is if you lose sight of the human need, the thing that people want, it doesn't matter what you do to manipulate the system to some extent, because you'll be missing out on the most important part, the people who are investing.
Exactly.
No, I like that a lot. And I think that's something that's probably universally applicable beyond just ETFs, just the way we do business, because business doesn't exist without people. Now, I think this next question is a really important one for anyone who's going down the entrepreneurial path, because the reality is it's a risk, right? Failure is going to happen. It's not a matter of when, or not a matter of if, it's a matter of when. And knowing that you've gone from nearly $1 billion in assets back to zero twice, I think that's what you were saying, twice, right?
Oh, yeah.
Yeah.
Unfortunately.
What kept you motivated to keep coming back and keep trying? How did you have the persistence to not give up?
So a bunch of different things. I think, number one, the most successful people are the people who have failed the most often. You don't, unless you're born on third base, you don't just do something and automatically you're successful. Could you get lucky? But, how often does that happen to people? You fail but you always fail forward. So you learn, what happened? What went wrong? What went right? I think some of it's desperation where, once you kind of go on that entrepreneurial path, A, you want to stay there. And, B, you've kind of burned your boats. So it's like, all right, you've got to make this work. And then just, confidence that, hey, you know what? If I've done it before, there's no reason I can't do it again. And, especially if I don't make the same mistakes, I'll do it again, but I'll do it better.
Was it Winston Churchill that said success is not final, failure is not fatal?
Could be, but I like it.
Yeah. And that's what I hear when I listen to you talk. It is just because you succeeded, don't think that's the end. You could fail tomorrow. And just because you failed, don't think that's the end, because you could succeed.
And I'm also constantly thinking about that, again, as a trader and as a business owner, risk management. First and foremost, we had over 3 billion before DeepSeek took the market down. We're still close, but, I'm always thinking, tomorrow we could be zero. What am I going to do to stay ahead? What am I going to do to manage my risks? How are we going to manage our capital so that doesn't happen?
Yeah. Yeah. It's kind of like in the contractor world. And Carl, if you're listening, this is your quote or your story. I knew a guy named Carl who always told me, as a contractor, always keep your box under your desk as a reminder. You could be gone tomorrow, but it's just as easy to find the next contracting job. So I love it. Now, as we approach the wrap-up time, I'm curious if you could take out your crystal ball for a second and let us know, what do you think, what are the opportunities that are going to shape the ETF industry in the next 5 to 10 years? What's coming?
So I think it's AI, and AI from this perspective. So my industry has been shaped by kind of two main things. One is indexing. Tell an index firm, hey, give me a list of all the companies in whatever, aerospace and defense. Boom, here's an aerospace and defense ETF. And two is active management. I think both of those are dead. They don't know they're dead yet, but they're dead. What AI can do blows that away. So we're coming out with, at some point this year, I think the first and only series of ETFs where AI picks the names and AI picks the weightings. And then AI rebalances and takes names out, puts names in, and rebalances the weightings based on what AI thinks, hey, these companies have the most potential to benefit from this. We're going to weight it this way. And I think that is going to blow indexing out of the water, and it's going to blow active management out of the water.
Man, I am very interested in seeing how that plays out.
I am
And I think
too.
a lot of other people will be as well. So for those people who are interested in seeing how this all plays out, how can they get in contact with you and work with you?
Yeah, so a bunch of ways. Our website is tuttlecap.com. I'm active on Twitter at Tuttle Capital. And then we've got a daily newsletter where I basically, and that's for me in my own trading. I basically take the news of the day, throw it into AI, and who are the winners, who are the losers? And that's theheatformula.substack.com.
Awesome. That's fantastic. Well, Matthew, I really appreciate your time, all the insight. I'm always fascinated by ETFs in the market. For everyone else who's listened all the way to the end, if you found some value in what Matthew and I were talking about, if you know some people who are looking at ETFs and who could use some support, share this episode with them, share the value, share the winnings, and let us know how that goes. I would say also, though, think about what we've talked about and what this applies, how this applies to your business, your investments, anything, and take an actionable insight, apply it, and let us know how it goes. Because as always, we really do want to hear from you and hear about your progress. Matthew, thanks again. This was really insightful. I've got a few things to think about myself, and for everyone else, we'll see you next time on Breakthrough Innovation.
Thanks for having me.